Mehrotra sir, good morning.
मॉर्निंग.
हाँ सर, ज्वाइन कर रहे हैं सीईओ सर ना.
ठीक है, ठीक है.
सर मैं आपको
नहीं,
को होस्ट बना रही हूँ.
मुझे
आपको भी.
अच्छा, वो किस लिए?
Sir, so let it be there like this. 2-3 people are co-hosts. Thiruma is there.
ओके.
So Mishra sir has also joined.
मैडम गुड मॉर्निंग.
Good morning sir. कैसे हैं आप?
गुड मॉर्निंग सर. गुड मॉर्निंग.
गुड मॉर्निंग. क्या हाल चाल है? कैन वी सी
बढ़िया
यू?
सर. बढ़िया. फाइन सर. फाइन.
कैन वी सी यू आल्सो?
Good morning, sir.
Yeah.
Good morning, ma'am. Everyone.
Good morning. Good morning.
गुड मॉर्निंग मैडम. वेलकम.
Srimathy. Thank you, sir. Thank you so much.
Our CEO is just joining, I think.
Yeah.
Yeah. And then we will start.
See the youngsters, the future of the banking industry in one forum. You know, that was the first thought that came to my mind when the lecture.
Yes. We are very much thankful, madam. You have accepted our request at such a short notice.
It's always a pleasure to, from the seniors to juniors or vice versa. I mean, the reverse also. The interaction from the youngsters to the seniors is always a very, very beneficial association. I'll just go on mute.
Yeah, madam. Yeah. And I'll just talk.
Right.
मैडम गुड मॉर्निंग.
Good morning sir. Good morning. Mehrotra जी सर आ गए हैं.
Good morning, sir.
Good morning.
Good morning.
Sir,
Yes,
madam.
Good morning,
Good morning, madam.
Madam Srimathy.
Good morning. Good morning, sir. Yes.
Good morning sir. Good morning madam.
Yeah, around 89 we can start. Or
Okay. Yeah.
yes.
Sir, I'll start sir.
Yes.
So, good morning to everyone. I'm Ravita Vadva. I'm the coordinator of the program and I'll be coordinating this event also. So, welcome to the Leader Speak series of the month. Respected CEO sir, respected madam, respected directors Mehrotra ji, our director operations Francis sir, PDC heads Govind Rajan sir, Barpanda sir, our faculty members Mishra ji, Anand Mohan ji, John sir, and CDO sir Gupta ji. And dear participants, we welcome you all to the Leader Speak series event of the month September. And this is our great privilege that Madam Srimathy has actually agreed to address you. This is the first event, Madam, we are hosting for our participants. This is the 12th batch of Advanced Management Program in Banking and Finance. And Madam, this year we have 90 participants. So it's a huge batch. This has actually happened because we started this program in virtual mode. It was in 2020 when the pandemic had happened. So we moved to the virtual mode. It's a hybrid mode. And this program is actually in sort of collaboration with IIM Calcutta. So we have 19 modules in this program. We do weekend programs. And for 5 days, we take them to IIM Calcutta, where they stay at the campus, and we cover various topics like macroeconomics, organizational behavior, then strategic management. And then we also ask them to come to our campus at Bombay, wherein we do soft skills, basically modules, corporate communications, human resources, and marketing management. So we had been doing like this for last 3 years. This is the third year we are doing this. And we have 19 modules. This is a module-based learning. And we start with the economics, Indian financial architecture. We talk about banking resources. We talk about the legal rules which are applicable to the banking, credit management, financial management, credit monitoring, treasury, risk management, IT, cyber security, and we have also introduced a few topics like emerging technologies. So we also tell them about business analytics, and we tell them about blockchain, and the various data science. So a huge.
So very correct.
So it is a
Yeah.
10 months program. Welcome to the program, ma'am. And I'll give a brief introduction of our chief guest. Madam is an executive director, Indian Overseas Bank, and she is a MCOM, MBA, Banking and Finance, and CIB. And Madam assumed charge as ED of Indian Overseas Bank in March 2021 from Canara Bank, where she was the Chief General Manager. She has been deputed to NABARD as a Chief Vigilance Officer prior to taking over the present post in Indian Overseas Bank. Madam joined Canara Bank as a probationary officer in November 1986, and she is having 36 years of experience in all categories of branches from rural to metro, and has worked in verticals like branch operations, mid and large credits, human resources, risk management. Madam has worked across the country and headed the prime corporate branch at Cuff Parade, Bombay for over 3 years, and headed the corporate credit wing and international operations at head office of Canara Bank before becoming head of Chennai Circle. Madam was also deputed to NABARD as Chief Vigilance Officer in July 2018. During this period, Madam held additional charge as CBO of New India Assurance Company Limited, State Bank of India and Bank of Baroda for varying periods. Madam, welcome to the program again. Now, I would request our CEO Dasa to please give a welcome address.
Right. Thank you, Ms. Srimathy, for joining this Leader Speak series. In fact, in IIBF, the mission is to develop professionally qualified bankers, and to that extent, this AMP program is bridging the gap at the level of DGMs and below. Basically, we try because GM and above this BBB then take them to IIMs and other things. But the creation of leadership, we feel that it starts at a lower level. So the program is designed in such a way that it takes the best of both worlds from the management as well as from the banking. So it's one of its kind course, and we take the help of IIM or in support in designing the course, and we choose people from IIMs, from other management institutes, retired bankers to take the class. The only issue is what Ravita was saying, that it is in hybrid mode. So the onus lies on the participants, how much they will be able to observe, and onus lies also on the faculties, how do they involve the participants here. But the last 2 years, our experience has been quite good, and the feedback from the candidates are good, and based on the feedback, we try to revise the course every year. So the Leader Speak series we started because we thought that the bankers who are joining here, or bankers or other, we have also participants from RBI, participants from CCIL, and last year we had the Ministry of Defense. So when they interact with the leaders, so I feel that the experience is no substitute to the learning. So particularly the MDs or EDs of nationalized banks have gone through various assignments and seen various places. So the invaluable experience which they acquire, it gives the feeling, how do they approach the situation, how do they handle the people. So when they see and interact with people like you over a period of time, they also feel that we can also do. If Madam can do, Ms. Srimathy can do, then we can also do. So thank you for joining. And I think I should leave the podium for you and participants here. Thank you for joining.
Thank you, sir. Thank you so much. So I welcome Madam to please give the delivery on topic. Role of banks in making India one of the 3 biggest economies of the world from the present 5th position.
Yeah, very good morning to you all. Sir, the directors, the other faculty members, and the AMF participants. Very, very good morning to all of you. And first, I should thank our IIBF team to have reposed that confidence in inviting me. And I'm so glad that I'm the first person in this series. So there is nothing for that you all can compare me with. So whatever I say, at least so when the others come, and then you will know good, better, or worse, or whatever it is. Great. See, though a topic has been given to me, as our CEO sir mentioned, I will be more interested in sharing my experiences as a career banker. Started the journey, of course, the brief profile that was read out to me was started with Canara Bank as a probation officer. I actually started as a clerk in Andhra Bank in 1985. And then 1 year later, I switched over to Canara Bank. So, starting a career from a clerical to being in the executive director position today, it's a long journey. It's a very, very long journey. I won't say all through smooth. No journey can be smooth over such a period of its 38 years. Now I just completed 38 years in August in the banking career. I'm not going to be contributing so very greatly on a very particular any topic that is given to me, because you all have the faculties, you have the best of the academicians, other people who can deliver and give you a great content of any topic that is given. It is more a practicing banker's point of view. The same topic, how do a practice real-time banker look at that, is the view that you're going to get. I also started, as I said, as a clerk, junior officer, and I was also a part of the CAIIB. Those days it was called IIB, right? Not IIBF. It was only the Indian Institute of Bankers, and all of us were getting that CAIIB. And the only first attraction was that 1 or 2 increments that were given to us. We all started with that. I still remember. It used to be CIB part 1 and part 2. And that experience itself was great. I don't know how all of you are all placed there. Even the subjects were, I won't say totally different, but they were not anywhere today's topics. All the current topics that you all are getting to cover, right from your risk to your cyber security to your artificial intelligence to data analytics and whatever the topics, none of these topics were there. These topics didn't even exist those days. With even these words, the risk management, the risk itself was, everything is, ultimately nothing has changed, at least in banking or career. In finance, if you see, it's an old subject. Whatever we have invented is a new way of looking at the concepts, which we didn't know that concepts existed, but we knew how these were practiced. For example, the financial management and the modeling, that all the things that we are all learning today. If I go back to my 1985-86 days, how I was taught to look at credit. The simple English in which we were, our bosses told me, when you look at any proposal, all that you need to look at is, you have to see whether will the borrower pay, can the borrower pay. These are 2 simple English sentences that were given to us. Will the borrower pay means what is his due diligence on that customer, on that prospective borrower. What is his today, whatever in the risk rating models, whatever you do, you give marks for the management, you give marks for the this thing, his credit history, you think everything is covered, the whole part of it is covered under that simple sentence, will the borrower pay. Just assess what is his background, what is his previous history, what is his this thing, what are his family, what are his business, everything. Will he pay? Rather, does he have the intentions to do business out of my money, earn for himself and pay me back? That was the simple one sentence that was given to us. The second sentence that was given to us was, can the borrower pay? Can the borrower pay is all your technical or economic viability studies that you are doing. Whether the business model is good enough, whether the money that I'm giving is going to be deployed in that business, which is going to generate that adequate revenue that he's talking about, so that he is able to give, he's there with a surplus that he can service my bank loan and then be left with his margin. So the concept, everything that we talk about was there, right? Only thing is, we didn't know all these models. We didn't know all this financial modelings. We didn't know all the things, project management theories. We didn't know risk. We didn't know all things. But we knew in simple terms what it was. Those days, it was easy to connect personally to the borrower, prospective borrower, or to the borrower. They are from the same place. You knew what he was doing, what was his background, how he was doing. Today, how the factory is working, or how the unit is functioning, or whatever he is doing. It was easier to see, know, understand, and go about. Things have changed with the times. the subjects, everything has the coverage, the way we look at it, everything has completely changed. So that is how the topics, the things, contents, everything of the training also has over the years gone so much. I wish now I can restart and do all the courses that you all are offering now. It will be really good to go through this. I'm glad you all are doing this program. This is, I think, a composite one that focuses both on the contents as well as this, as Ravita already mentioned, right from the soft skills to leadership skills and others. And like Dasa said, one important aspect of all this is, apart from the learning that is given there in the classroom or in your virtual rooms, interacting or getting to know the seniors who have been through this journey. A lot of what we all learned was from our seniors. No books, no theory, no explanations can give you that type of an insight as sitting with a senior who is a very experienced and who has seen different times. The various situations that arise, the problems that can come. The person who has handled all that is a person who can give you that skills, the softer skills or the other skills that are required to handle your days ahead. In that sense also, what has changed from the time we entered, say 4 decades back to this decade, is when we had all age groups in the bank. Our manager, when we were there as a clerk or as an officer, our manager was maybe, say, 10 years older to us. And then we had a chief manager who was still younger, and then we had an AGM, and everybody was experienced. Just even one level above you used to have some 25 years of experience. Today, a scale 3, scale 4, a scale 5 persons is not getting that type of immediate bosses who has seen that exposure. That mid gap is what I'm finding, at least in the industry, that the banking sphere that I'm getting to see. I do not know how it is in all the banks. You are having the youngsters who have, say, experience of 5 to say 10, 12 years. And you have people who are about to retire, our category of people who have got 1, 2, 3 years to retire. The mid segment who have seen that 25 years of service or 20 years of service, who has gone through all the sphere, that is the gap that is there. That's not becoming a very smooth grooming on the field or at the desk. That is the gap that I look at it. Coming to the given to us, the role of banks in making India one of the 3 biggest economies of the world from the present position. What is the feeling? What do you all think first? I want my participants to tell me, like, is it an inevitable moving to the second, third position? Or is it going to be a big task that we all have to discuss, deliberate, plan, to execute, and then wait to see whether it's going to happen or not? Anyway, anyone?
It's bound to happen.
It's bound to happen. So why do we say that?
Next,
Exactly.
because I believe that in next 10 years is India's era, because the way we are expanding, because post 1991, if we see, our thrust was on services only.
Exactly.
And we made our population as a strength, which was earlier considered as a weakness.
Exactly.
But now there are various industries are coming up, like in banking, of course, the fintechs are coming in a different landscape. UPI is there, but if I see now IT in future, I feel IT will be there, but there are many sectors like automobiles, defense, even high class technology like chip making, AI. So there are various industries which is coming up in India, which will act as a catalyst, because we are not now going to be dependent on banking alone. Then IT came, and now other industries are coming, following by manufacturing. So that's why I believe.
That's a very interesting you give.
Yeah.
Yeah, one part. I also completely agree with you. It's not a question of whether we will, it's a question of how fast we will. We are already on the escalator. We have stepped onto the escalator. The escalator is moving. We are already there. Today, the IMF world data says, say in 2022, India's GDP was 3.39 trillion US dollars. And we were in the 5th position. Currently, in 23 again, they talk about we are at 3.74 trillion. And their IMF's estimation is by 2027, we'll be at 5.15 trillion, and 2028, it will be 5.58 trillion. The outlook says that from the 5th position today, in 27, we'll move to the 3rd position. So whom are we expected to leave behind? Because today the 4th position is with Germany and the 3rd is with Japan. We are at 3.74, Germany is at 4.31 and Japan at 4.41. Between 4.41 and 4.31 is only 10.10 trillion, there is a difference. But then look at the growth rate that we are all looking at. What is the rate at which we are growing vis-a-vis what is the rate the other economies are growing? And then we can think in what pace the difference is getting narrowed. So we know at what rate we are growing, right? We are at 6 or 6.3 or 6.1, whatever is it, the predictions are different, the actual numbers are there. But you see what is the forecast that Germany and Japan are having. This is again the World Economic Outlook updates by the IMF. In July 23, says the forecast that German economy will contract by 0.3% in 23 and grow by 1.3% in 24. So the rate at which the other economies, again, if you see Japanese economy is estimated to grow by 1.4% this year and by 1% in 24. So if you look at 23-24 itself, India is expected to grow by 6.1% this fiscal and 6.3% next fiscal. So as Priyam Ghosh had rightly pointed out, we are bound to be crossing and moving over. The real question will be, when are we going to surpass the other two, the two giants, the number 1 and number 2? That's a bigger game. But when we cross this phase, then we are set to move, and the accelerator has to be, the gear has to change maybe further. Now, it's good to say that yes, we are growing, so we can assume that we will grow the same rate, and then the others are assumed to be growing at a lesser rate, and hence. But then what are the things that are going to actually propel our growth? And what is a banker's role in that? The forces, they say that there are fuel economy, India's economic growth. It's always been the same, right? You have the demand side, you have the supply side, and maybe you have the regulatory and the policy reforms. Priyam was generally talking about the demographic, right? The age, the same. At one point of time, we were talking about the drag on our economy, Indian economy, is because of our growing population. And we were all like so scared, or we were all like talking about how to control population, otherwise how India will be doomed, and this and all that. Today, they say Indian population, I think, has even crossed this thing of Chinese population, but still we are only cheering. Why is that? See, every economy goes through a cycle, right? There was a time when, the boom cycle, I mean, the working population, the population that is contributing to your GDP, to your economy, that decides. Because at a time when it was higher, our mortality rate was higher, and the health was a big factor. The population itself was called a deterrent to our growth. Today, with all those scenarios changing, the birth rate being under control, the life expectancy changing, the healthcare taking up such a good part, and the life expectancy, and people are, in a productive bracket for a much, much longer period, then that is called a demographic dividend that our country is going through. China had their own demographic dividend period. Japan had, Korea had, all the economies had. And then we have the other economy, the European other economy, which is again an aging economy. They crossed this field much, much earlier. At a time when we were all looking up to them as the developed countries, that was the time they were all experiencing it. Then that's an aging population, and that dividend is long back over for them. So today, if you see the statistics talk about, India has around 67% of the global working population. Can you believe? The working population globally, India is having 67% of the global working population. And there is one statistic which says that by 2030, The median age in India will be 30. Then you can imagine what magic our country can do if we really take advantage of this phase. This is also a golden phase. This will also pass out. Maybe another 2 decades, 3 decades down the line, we won't be in this high. Again, our aging pattern and our demographic pattern will completely change. One of the statistics I was just reading yesterday before was, in 22-23, the inward remittances that have come in from the people who are, working abroad, the working population who are there abroad, is contributing to around 3% of our GDP, and that's not a small figure. 3% of our GDP alone is coming from the remittances that are coming from outside India. India is said to be having the largest and the high quality pool of engineers in the entire world. So we have so many pluses, the tide is in our favor now. How we harness all these, how we exploit all these advantages to us will determine how fast we move to the third position. It is not when we will, it's not even whether we will, it is when we will come to third position. So on the demand side, the first advantageous position that we have is the consumer boom. That is because of the demographic position that we talked about. And because of that, the domestic consumption itself is so high. When the domestic consumption is high, when the demand is high, the scope for the other sectors to expand and the economic activities to go get hyperactivated is the highest here. And then you have, because of this position, the contextual, the appropriate innovations that are happening around. There are things that we're talking about, even the people like McDonald's or the Amazon and others, how because of the demand that India is generating, they had to customize to suit our needs. People talk about, the whatever burgers and other products of McDonald's that we have here is not anywhere near to what it is actually sold there. Or even the Amazon, they do shopping here. Any of them, you talk to them. All of them and our own Indian domestic people, the innovations that are happening in every small, big field is the biggest trigger for development for our country. And of course, the green transition. The emphasis that we are giving to all these renewables and other things, and reduce the carbon footprint, I think that itself is a very, very huge expenditure that is getting into these sectors, which in turn is giving rise to a lot of economic activities and this thing. Coming to the supply side, again, of course, the working populations, the demographic dividend itself is a major thing, and the access to finance. And this is where the biggest role of a banker comes. Though I wouldn't agree that banker's role is only in giving credit to the economy. We'll come to that part. And then what are the other facilitators for this great growth journey? The regulatory and the policy reforms that have been happening in the last 1 decade, 2 decades, are more in the last few years. The various policy reforms, the regulatory reforms, the enabling factors, like, we know that IBC, that Insolvency and Banking Code itself, is a major enabler that has been come. Then you have the lot of around 39,000 redundant regulations were eliminated. The ease of business measures have been introduced. And all these regulatory and policy reforms are also giving a big boost to our growth journey. Having said that, what are the barriers? There are some barriers also. Exciting phase that we are in. We are still left with some of the thing, and one of the barrier will be the unbalanced growth. Are we really growing equally geographically also amongst all parts of the country? And are we growing equally in all the segments, the social segments, the economic segments? That I think is not happening, and that is one focus area where we need to pay all our attention to. Some of the people are becoming huge successes. People are making money, becoming millionaires, billionaires, to startups and others overnight. But still, there are very many lakhs and lakhs of people who are being left behind. The interior parts of the country are not seeing that type of a growth business, though that the difference is blurring. It's getting narrower at least. But still, we have that problem to handle. And we have that unrealized demographic potential. While I was talking about, the demographic dividend and 7% being in the working population age and everything else, not that all are contributing. One part all of you definitely know, how many women are coming to work, earning, contributing to the GDP. Working, I will say almost every woman works. Every household, every woman works. But for that work that she gives in the household, the other 50% would not be doing what they are doing today. But if you look at from the GDP and the economic growth point of view, how many of them are actually there coming and contributing to that economic thing? And how many of them are actually employable? The type of education that we are giving. Maybe you and I are of a different class. The type of graduations and engineering qualifications, or even the other school educations that we are giving, are they giving them that adequate skill and the knowledge to take a worthwhile job? There is a huge gap there. There's a huge gap there. So the education, the skill building, and of course the healthcare, these are grossly inadequate, and we need to go a long way in taking care of these barriers. Only half of young Indians are employable is one of the statistics that says. So these are the both on the plus side and the minus side that we can talk about. Now, what are the banks doing? That was the main topic in all this. See, there was a time, I said, the decades that we all started, the bank had a limited role of taking money as deposits and giving money as loans. These are the only two fundamental roles we did. Then we had some small other ancillary works, like we did handle some lockers, we did some small other investments or something. Beyond that, the role kept on expanding. Today, the whole of this week, we were busy. I'm with Indian Overseas Bank, which is headquartered in Chennai, right? The last 4 days, not even 4 days, I'll say the last fortnight, we were completely consumed and engaged in one activity, and that was the Tamil Nadu government yesterday inaugurated one of the schemes, the government schemes called Magalir Thittam. And you all must have seen that one page, Kalaingar Magalir Thittam. It is like giving 1,000 rupees per month to the ladies, the working age ladies are they're called as the household house heads. 1,000 rupees per month is going to be credited to. Now, what is a bank doing there? This is a government scheme. The government is taking the money from their kitty, from their budget, giving 1,000 rupees per month to every lady here. You know, we had to work for nearly 4 months on this project. It's like the DBT. It's like your direct credit to them. And right from enrolling, identifying those people and getting the contact, doing their KYC, opening their accounts, all of them, giving a debit card. And IOB alone, as day for yesterday, did 18 lakh beneficiaries. And Indian Bank had around 20 lakh beneficiaries. For this 20 and 18 lakh beneficiaries, the two banks, the Chennai headquartered bankers, had sleepless nights, onboarding all of them into the scheme, ensuring that KYC data are updated, accounts are opened, the debit cards are given, and that whatever that money that came from the state government into our back-end transaction, giving credit to these 18 lakh beneficiaries overnight. Our people have to sit till 4 o'clock in the morning because the inauguration was there at 10 o'clock in Kanchipuram. So where is the role? Anything that happens in the economy today, anything that happens in the country today, can it happen without a bank? So I was just thinking, when they said role of banks, I said, which role am I going to talk about? The common perception is that banks give loans for projects or for working capital and all that. But what are the banks today doing? The COVID period, the whole country was somewhere else, doing, and everybody was in a virtual mode. but the work on the bankers were the highest and the biggest. Whatever that that DBT concept and all came at that time, right? Whatever that financial assistance that were to be given, the 2,000 rupees or 4,000 rupees, how it was packaged. Today, with technology moving so fast, the banking is catching up with that much of technology. And everything that, every moment, every progress that is happening through the banking channel only. As what is changing, maybe banking itself is changing. What is changing maybe from the type of banking we did, from the brick and mortar model that we were working in, to the maybe the alternative banking channels, or to the invisible banking channels. Banking in itself will remain. Today, the technology people are not our competitors. They are complementing each other. In fact, I think Priyam was talking about the various other sectors. Today, the situation is that when everybody collaborates, and that is how the new India is emerging. The UPIs. Who would have thought this is where India would be? When we were finding it difficult to make our bank people, take a debit card, there's so much of distance. When the UPI came, it came like a storm. Even to a vegetable vendor today, you go on the street, somebody is selling something, and that lady may not even know the full form of UPI or GPay. She says GPay kar dijiye madam. That's where the world has moved, and all this would not have been possible if a banker was not behind the entire scene. Coming to the traditional role of access to credit, everyone needs credit, at least those who are in business. The credit, whether it comes through the fintech mode, or whether it comes through a brick and mortar mode, the dosage of credit in time, in adequate dose, will be a prerequisite for any economic activity to forge forward. And this one are the best people to play. Again, the which bank may change. Today, it may be a small finance bank, it may be a fintech bank, it may be an unknown payment bank, it can be somebody, a simple online bank, whatever it is. But then it's all banking is what I'm talking about. When the credit is given at the right time in adequate dosage, everything else can start and move forward. The role of banks in the another area is the financial inclusion. And this is also an area where the bankers are, up to our neck into it completely. This is one of the areas I was talking about, whether the growth is actually becoming balanced across. And one best way to do that is to achieve financial inclusion. All the governmental schemes, whether you talk about, PMJJBY or SBY or any other Jan Suraksha schemes, or APYs and these things, or a Mudra or a stand up or anything, any scheme, anything that the government is talking about, the medium to execute that, to implement that, to spread that, to popularize that is only the banker. Every scheme is being done through the bankers. The SHGs, the self-help groups, the JLGs, the formation, this is a huge success. The SHG and now the JLGs, it's becoming a very big success. Again, right from forming the SHGs to educating the consumer education, the financial literacy. I mean, where is the banker not there? Financial literacy is one of the very big subject that we are all engaged in these years. And at the root level, we have the the LDM concepts, right? The lead district managers today are hyperactive. And when the government is also active and the bankers are active, there is no stopping. I don't even know whether this is the type of activism that is going on in other countries across the world. I doubt it. With the banking sector and the government joining hands in every other initiative. If you see typically what is my day like here, it is almost, for example, tomorrow we have a VVC with DFS. That will be again one of the government schemes. Then I think today the other ED is there. There is a scheme called Vishwakarma getting launched. He is in Delhi today. Narendra Modi is inaugurating that. And how is that Vishwakarma scheme spanning out? It is going to be like you identify the candidates, give them skill training. That the government part, the part of the training part of it will take care. The state governments will identify. They'll train the skills, give them a certificate, certify them for in that particular trade, and then pass it on to the banker. Now you give them the credit, and then they do the entrepreneurship or whatever it is, and then it moves forward. The government gives a guarantee, but again the guarantee moves through the banking. So one day it is a Vishwakarma, one day it is a government's DBT scheme launching, and then it is maybe the RBI is calling us for a consumer. How do we handle the consumer issues? It is everywhere. With anything the RBI wants to do, anything the government wants to do, the first person they can think of is the banker. So digitization, again, I talked about. All the fintechs in the country are talking only to the bankers too, and this is a beautiful stage that we are in. Even our own bank, all the banks are going through a digital transformation, a complete digital transformation. The days will be over when people come to you for a look, asking for a forms to fill up and give you a loan application. Now it's all a click from their own place, and it's going to be endless, seamless. We are talking about not only seamless loan sanctioning, it is going to be from the time he clicks to the time his account gets credited with the loan money, it is going to be no manual intervention. And again, behind all that, all the fintechs, the brains and the collaborations are there. But again, the banking is the inevitable, the big part of it. Look at the other areas, whether you're talking about the venture capital, whether you're talking about the seed funding, whether you're talking about all the para-banking products, whether you're talking about the banks are selling insurance, the banks are selling mutual funds, the banks are doing wealth management, wealth thing, any area. Because the reach of the bankers is something nobody else in the country can reach. There was a time they said, the post office reach is the biggest. But I think today the bankers' reach is unparalleled. Whether on the social sector or on the economic side, the banker's role is only going to keep expanding. So as the people in the middle rung, I suppose you are all in that scale 3, 4, 5 grades, right? Is that the level of the participants are in which grade in the banks?
Yes, a few DGMs also, but mostly from
That's right. So this is
GM
the
also.
Okay, we have GMs also. That's
Yeah.
right. That is the. I suppose the GM cadres will be lesser in number. This segment, the people who are in that scale 3, scale 4, scale 5, you are all seeing a completely different scenario today. But what you all are going to handle in future is only going to be maybe easier in the sense that technology is making things much easier. But then the scope and the coverage of the banking is going to only expand. I mean, you should be proud to be a banker. It's very challenging. Very, very challenging because, our period was much easier. If at all somebody had to call and fire us, they would have to fire us maximum for why your deposit and lending target has not achieved. Or if at all some beyond that, there were no topics for them to call and fire us. Today, I'm sure you are getting 100 calls on different matters on one single day. And that is a real big challenge that all of you all are facing, but that is also the excitement that you all are going through. I was just telling you, and then how much easier it is today, the learning part of it, or the acquiring the skill, or the knowledge. See, as a commerce student, maybe, I can say that when I was doing my MCOM and all that, we were taught, whatever you people are doing today, the simple concept I'll just take, maybe the IRR, the internal rate of interest calculation. Those days, everything was manual. You know, our lecturers used to teach us how an internal rate of return is computed. We all used to take a pen and a paper and start doing one calculation at this rate, and then you move the rate up and do another calculation. You do a third rate and then do a calculation. Then you find this and this rate and this rate are nearer to it. Then you do an interpolation. For formula, there's an interpolation formula, and by the time we completed one IRR calculation, the 40 minutes class session was over. And if at all we wanted to be sure, we needed to take another 2 or 3 such sessions to learn what IRR is calculation is. Today, I don't even know like if people ever even paid attention to how these are getting calculated. We know that there is one Excel and there is a formula and there is what we click and go. Things there was a time when we were all, you know, storing the physical circulars and the manuals and the other RBI publications and all that in files and files and files we used to maintain. And to refer that, how we used to find. Today, I mean, it's all, we laugh at our own period that we went through, whether we really spent our years productively. To refer to one guideline, to refer to one policy or what was before, we spent hours and hours digging out the old circulars, the old manuals, the old things, and finding out what was the original direction and how, what it changed and what is it now, what things, and whatever changes that happened were not ever available readily. So those nightmares are all behind you all. The knowledge is available at a click. The inputs, whatever you need, are there. The demands are you on the same time are ever increasing. And it's spreading. The role of a banker is no more the core role that a banker, that we all saw it as. It's ever evolving, getting more and more wider, and you are a part of the entire growth journey of the entire Indian economy. Rather, I would say the pivot. Without a banker, I can't even think of how much of whatever is being done is being done. See, we talk about that that Aadhaar or that unique ID as a game changer because that enabled all the technology. But again, that Aadhaar, who was the person? I mean, who was the mechanism which really drove that? Doing an Aadhaar seeding, again, it was given to the bankers. The people had to come here to do your Aadhaar thing. Without the banking, it would have been extremely difficult. So that is how the roles are evolving. The question and the topic again is whether the role of banks in moving Indian position up. India is definitely going to move up sooner than later, from 5th to 4th, from 4th to 3rd, and maybe in our lifetime we will see India even moving to 2nd or 1st position. And a banker's role is going to be ever appreciated, ever needed, more now than before. It's going to be more in the future than it is now. That is the topic that I have come prepared with. Would be lovely to hear something from you all, because they say the reverse learning is more beneficial because of so much of changes happening. Maybe what we learn from you all is going to be more beneficial for the organization, for the industry as a whole, than what we can even pass across to you all. I conclude on that note. We'll be happy to take some interactions forward.
Wonderful, ma'am. I think the way you elaborated the things, actually, in fact, the S&P Global report on 4th of August said that India will become 6.7 trillion economy by 2031. And all the policy decisions you now told about that promoting digital economy, fintech, technology-enabled development, or this transition, climate action, everything now revolves around the banks. And yesterday I was attending the G20 meeting on financial inclusion. They were showcasing our public infrastructure, digital public infrastructure, and the way it is being propagated. And everywhere there are bankers. So if the fintech people came, they say that this should be through the banks, and the government came that we are taking banks into consideration, and they were asking me, how do you prepare the bankers? And exactly this happened when you are talking to the bankers today. How do we prepare the bankers to take on this challenge and be an integral part of the growth? When we call it the this virtuous cycle of investment and growth. India is a investment-led growth. So
Yes.
the bankers will play a key role here, as you said, whether you will whether you can give the money and you will recover the money. That's the two things where we have to understand, madam. So and I think the participants will be glad to interact with you. Questions or any want to interact with madam, you are welcome. You have heard her the wealth of experience.
Yes.
No, I can understand. Sunday morning is not the right time to make people get very serious with such topics.
But madam, actually these classes happen on Sundays and Saturdays only.
Saturdays and
I
So,
know.
and it starts at 10 o'clock every Sunday. So,
actually, the people actually they toil for almost 10 months to complete this. So that is okay. But there are ladies also who are in the class, and not many have broken the glass ceiling like you. So
No,
naturally
coming
they
to
will love
that
to interact with you.
point, I will have my own view on that. How many people are really coming up to this level or much higher level also? If you really see how many of them are remaining where they are out of their choice, most of them.
Yes, yes,
Yeah.
yes.
Most of them remain where they are out of their own choice. I mean, if they were ready, if they wanted, anybody and everybody can break the salient.
Good morning, madam. Just want to make one point.
Yes.
Yeah, if we have to become, I mean, if we want to become the third largest economy, there is one point which I want to make is that recently government of India has had tie up with a few countries where we can do trade in rupee term, in terms of rupee. So if that keep on expanding with many countries, then I think our currency will have a value, and that will definitely add value to our trade and finance.
100%. See, in fact, towards that also, I think we are working. No, that one of the the remittance between India and Singapore and other things have started. Other countries also. See, the trade in rupee has given us a definite advantage, especially with Russia and all. When our this thing up there, going forward, also it's only going to expand. See, going through the intervention of US dollars and all that was not to our advantage, and nor is it to the advantage of the other country. But then again, how are they going to play? See, it's not only like how we are going to play on this. We may want many other countries to open with rupee trading, but then again, a lot of geopolitical issues are there. The superpowers are there with the China. Whether what are they going to do? See, it all depends. It's a beautiful guessing game. But there are many countries who are willing to do this rupee trading with us, and especially with whom we have both imports and exports, and that's going to be a definite advantage to us.
Good morning, madam. I am Prabhat Marana from Union Bank of India. I just want to share one thing. Is this distribution of the money what Tamil Nadu government and now Karnataka government is doing now? It is only for votes, or it will actually means it boost the economy. What we are looking for actually. This is actually making people lazy. Might be lazy, and I'm not challenging any of the schemes by the government, but just a thought, small thought, that we should encourage more to work, and output should be there. But this is not giving any output, madam. This
Understand. See, this is not strictly within the topic, but since you have raised the topic, I can only add my point to that. This particular
Madam, this
point
a
is
topic
making
only.
us also in the field also difficult because the repayment culture it is killing. So similarly, this thing, it's all starting with a good intent, right? But whether the governments which are doing it are doing it with the right, I mean, only for that is a question. But it's all started, for example, I think in Tamil Nadu, when the midday meal scheme was started about 4-5 decades back, when before, I think before even MGR another and all that period. And that was a huge success in the real sense. From midday meal scheme, it moved to a breakfast scheme also. These are really very good measures. When the children are the people who cannot afford, the children are given the meal inside in the classrooms. It attracted the children because I am myself a witness to that change. But now if you take it forward and say that giving this money every month to the thing, whether it is the same thing, the concept with which, but at least this particular scheme is introduced, they say that same thing, what I was also mentioning, that ladies are all working, but not all of them are a part of the economic activity. So this scheme says to honor and to help that segment of the society, that is the women, the household housewife or the homemaker women. So at least they should be entitled to some particular financial assistance is what the scheme talks about. It is open to all our interpretations, maybe out of context for me to give further views on that.
Thank you, madam.
It may increase the spending also. If the people have money, if they have, at this particular time, post-COVID and all things, if the people have the money, it may encourage the spending. That is the cycle they want to create, but continuing it for long, what madam says, may not be in the right direction.
But one point I'll tell, giving that money to the ladies is definitely going to benefit the family.
Yes. Yes.
The same money, if it is given to the other segment vis-a-vis this segment, money that is getting into the pocket of a lady, if it is not grabbed by the menfolk, it will go only for the children's, feeding the children and the family.
And saving as well.
No, madam, it is not. I have not.
Whenever we are saying
specifically
from here, we
But
are generally watching from middle class or upper middle class point of view. But whenever we are going to some village or some rural, extreme rural area, for those people, even 1,000 rupees matters a lot. So government,
his
all
point
the government
was
has
whether we should enable him, help them to earn that, or whether we should dole it out, is the point is raised.
my point is correctly that only, madam.
it will inculcate the habit of saving as well as earning, because at any point of time they will have something. And
right, I think we should move on to the other topics. So this is a non-ending discussion.
Ma'am, I want to ask, as a CBO, what challenges you have faced while performing your duties as a CBO?
Okay. For the first point is, why did I even choose to opt and go as a CBO? The thought that came to, why did I think like, let me go and see what happens the other side of the table? I was totally from the credit and the operations side. I was more than say about 1.5 decades on the mid corporate and the large corporate side, and that is a period when that after the 2010, 12 and onwards, when all the accounts, the corporate bigger accounts started falling, and so many cases were getting into that CBIs and the other things and all that. We were wondering, like, what is it that the CBI people are finding that we ourselves with so many years of experience couldn't find? What fault are they finding with the bankers that we in our own grooming and all that we could not find? So when that CEO role came, it interested me to see, like, let us see what glasses that side looks at. So this was, if you look at my experience as a CBO, I'll say the first advantage I had was the inter-organizational exposure, which you don't get generally. See, all of us join a bank, and almost through our career, we are in one bank. Maybe except as a AD or MD, you move to another bank. But for that, you know banking, or you know the industry only through the glass of your bank. As a CBO, when you move out of this bank and go and sit in another bank, that inter-organizational experience is completely something you all should see to know what it is. The same, the primary set of rules and the game is the same. But since how each person looks at that, how the policies are interpreted, how these systems are evolved, how the do's, don'ts are put up, and how they look at vigilance itself. See, those period I used to go and argue with this CVC there, the Central Vigilance Commission there. I say that, see, for a same corporate account in which, say, 7 of my bank people are booked, for a same account handled by another bank, is the same consortium account, nobody is booked there. See, that again shows what is the difference in handling what the vigilance aspect itself from bank to bank. And when a person who has been in the field goes and sits there, it's much easier to understand. Most of the time what happens is the people who sit in vigilance are mostly who come either from a vigilance background within the bank, or they come from the HR side or from the administrative side. Most of them sit. People coming from the core operations and the credit side sitting in the vigilance, you will be able to understand, like, though the things have gone, the accounts have gone bad, whether what we talk about majority of the times, what happens, we declare an account as a fraud as per the definition given by RBI. The first stage starts with whether you declare a borrower after it becomes NPA as a willful defaulter or not, and second, whether you declare it as a fraud or not. To declare as a fraud or not, n number of 1, 2, 3, 4 points are given. One of the common checkbox tick will be on whether the funds are diverted. Now, what is diversion again? It can be within internal diversion or an external diversion. Now funds are diverted. When the funds are diverted, you are forced to declare an account as a fraud. And then the next guideline of RBI says when an account is declared as a fraud, you need to file a CBI complaint. And now the CBI, when you go and sit there and talk to them, they do not understand any of your guidelines. The minute you declare an account as a fraud, or whether you put a case against somebody as a vigilance, they look at vigilance as a criminality. There is a huge difference between what is criminality and what is a vigilance angle as we define. In fact, we were a part of that entire team who went and talked to CVC, and CVC mooted, and the whole definition of what is vigilance and non-vigilance in the last year only has got changed. So these finer things, it helped us to go and make them understand, or to understand from CBI side what is how they look at a vigilance case, how they look at a wrongdoer, what the hindsight wisdom that the CBI has is something. We used to tell them that, look, you all are looking at an account, say 7 years or 5 years after an account has turned bad and something wrong has happened. We say, look at the same file at a time when everything is rosy, when you have no clue about how the next 7 years is going to span out. So these learnings, these experiences, something unique in the vigilance field, provided you come back to operations. That is, vigilance is not a field where you need to stick to. Maybe be there for some time to understand that world and come back to the mainstream banking is what appealed to me.
Yeah.
Yes, ma'am. Thank you, ma'am.
Good morning, ma'am.
Good morning, madam. Namaskar, and it is very nice to listen to you today morning. Actually, on behalf of the IIBF, I am heading this Calcutta Center of IIBF now. I am T. Bhatpanda. And madam, one question just from the economic side itself. That yes, as far as the growth is concerned, the GDP, volume is concerned, we are on the right track. But the issue is that, in fact, to be identified as a third largest economy, we need to have certain very qualitative economic parameters. One of the most important parameter is that there should be equitable distribution of wealth and the income. That is not somehow happening in the economy. There is a widespread disparity in income distribution, and somehow this growth trend has aggravated this particular issue. So what is your take on that, madam? Please?
I know, very true. In fact, this was one of the points I was also raising. I said one of the, the barriers to all this growth journey is the imbalanced growth, is what even I was talking about. And the financial inclusion and the other schemes that are coming in is a big time help. All the schemes, right from the Swanidhi to the Mudra to the SHGs, provided we do not allow these things to be misused. Right from the Vishwakarma scheme that is now getting started, to the SLG model, the JLG models, the thing model, and all these new governmental schemes are meant to take care of that. And according to me, the long-term solution lies in education, the quality of education that we give. Today, the people, at least in the hinterlands, the other parts of the interior parts of the country, the type of access to the education and the other avenues they are getting is not at all at par. So unless we increase that, maybe the skill development, the core skill development is also something. And there also, I think the bankers are there also. The training centers, the training RCTs that we call, the skill developments, I think skill developments and this financial inclusion methods will be one solution to the.
Yeah. One thing I would like to add, if you permit me, that is the health facility equitable distribution also is an important criteria for a growing for a developed economy or emerging economy. That is also, that particular facility also has got widespread disparity in the Indian population.
No
That is
doubt.
also one factor that needs to be taken care of by the government.
No doubt about it. No doubt.
Good morning, madam. Amit this side from Bank of India. I believe in China's growth, or for that matter, in USA's growth, banks played a pivotal role. And now, if we speak, I believe five out of 20 top banks, China has 5 top banks. So, are we prepared to have such kind of banks, and what are some key challenges and constraints on those fronts?
You know, like government also has been talking about this. There is a very serious intent about at least having 2-3 big banks. But I was just reading the other day. I think they're talking about the the market value of the HDFC is higher than many of the. See, we are growing. Whether a consolidation is required or not is again I don't know, decision. Only our future will tell whether that is a prerequisite or not. But definitely we need large scale, big scale, at least 2-3 banks in the country is my personal view. Because today the competition that is happening amongst the banks is not going to be of very big use to the country or the economy as such. The many times we are undercutting the rates, we are doing so many other things only to see that our balance sheet size looks good and attractive. Maybe those exercises, those things can be handled if we are seeing that again.
Ma'am, I
Thank
want
you,
to ask you, like the fintechs are also coming. They are also engaged in many of the activities now. So, how do you see the growth prospects of the fintech in future? Means, are they going to eat some our wallet share in banking, or they will be collaborating with us for better for both fintechs and banks?
It will be a happy marriage, according to me. It's already started happening.
Yeah.
Every
Right.
field we are finding fintechs, what they can offer us, and without us, they also will not be able to. They're not substitute for each other. They're complementary.
Okay.
Good
I'm
morning,
sure
madam.
Mr. Mehrotra and others are looking at the clock.
No, I'm not looking. I'm just writing.
No, you're just, I think,
Good
completing
morning,
the
ma'am.
Yeah,
Good
Mike.
morning, ma'am. I'm Dr. Mehrotra, faculty from Madurai. There is a concept, that CBDC, Central Bank Digital Currency, how it leads our economy to a different level. Whether do we have a dual currency model in our India after some time? This is my...
Actually, even I am not very clear how this is going to span out. We only know that it is rupee in digital form, right? It's only going to be in this form rather than in the physical form. I don't think it's really going to make that much difference, except that there will be a trail that you leave. That's the only difference, right? The physical money that you have, you don't read a trail from where it has moved to where, whereas the CBDC is going to leave the complete trail. Other than that, it's only money moving into a CBDC, right? The actual money moving in this form. I don't find that's going to be a huge difference in how it works.
Is it moving towards a global financial inclusion?
Okay, that's an interesting concept. How do you move to a global financial inclusion?
What I felt that the CBDC, it leads to global financial inclusion once our currency is to be
No, if
accepted
you're talking
all over
about
the
even
world.
the currency differences are going to vanish, that will
Yes.
be great.
This
There is
is
no
my
exchange rates and
my guess. Yes, ma'am. My guess. It's.
I
that
think,
is
sir,
very
she is
interesting.
referring to what Mr. Ravi Shankar was telling, that this transaction can happen through CBDC. So the seamless transfer you can make to other countries through CBDC, right? You are talking of that?
No, he talks about a global, in the sense,
Inclusion. Okay.
there is no currency concept. There is no rupee, or there is no dollar, or there is no yuan.
No,
Is it
no,
that
no,
what you're talking about? That will
this
be a
is
real exciting thought.
Any other question?
I think we have taken a lot of time from Ravida.
Yeah.
Unless the girls here, they want to interact, they are open for 1 minute. Yeah, Ravita, over to you.
Thank you, sir. Thank you so much. Thanks, ma'am. It was a pleasure listening to you on so many aspects. So I would now request our Director Training, Mehrotra ji, to please give vote of thanks.
First of all, it was a very thought-provoking discussion which Madam has done today. And a lot of actually good topics have been covered into this. First and foremost, I have liked that basics of banking. Because whatever like jargons we use today are the new concepts and anything, this is nothing new. We have been doing it since long. The only thing is that it is more scientific now, the more data-based, and it is actually needed as per the volumes of today. Because earlier what we were doing in banking, the volumes were not this much.
Very true.
And that is why we could do all these things actually in our own way by taking more time. So, but nowadays it is not possible. And I just remember when I was working in Bank of Baroda, so when Dr. Khandelwal actually took over as the CMD, after 80 years of existence of Bank of Baroda, we came out with the policy caption. Our business policy guideline was having a caption, back to basics, back to branches. After 80 years of existence of Bank of Baroda. So why it was felt? Because every time we have to keep ourselves reminding what are we doing actually, and how it should be done, how we can take care of the risks involved. If we that basic question we always put before ourselves, I think we will be on the right track. So this is some very good idea actually Madam has refreshed in my mind. I am thankful to you, Madam. And after that, the role of banks, everybody knows without banks, economy cannot move at all. Whether government schemes or anything, even the currencies, even the this financial inclusion, all tasks actually banks have played the pivotal role, and it is continuing to do like that. The shape of banking definitely has changed. Whatever we were doing in physical mode or in a very slow mode, now it has everything has become very fast online, and customers' expectations are also changing accordingly. We have to change all our products, our practices, marketing campaign, everything actually has to go as per the new generation's requirements. So this is a very wonderful topic. India is on the escalator of the growth, as Madam has given the term. We are already on the escalator. It has started moving. The only thing is that how actually it gains the momentum and how fast we reach our goals of at third position or second position in the world. So thank you, Madam, very much for all the thoughtful deliberations. And our participants have also interacted. A lot of ideas have come in. Mr. Barpanda has also thrown much light about this on very important topic. Thank you very much, Madam, and we will keep troubling you again and again. In fact, I was encouraged by seeing your presence in our women's program last last women's program. So that gave me encouragement, and we invited you for this Leaders Speak series.
It was my pleasure to be.
And ma'am, would have loved to have you physically, but everything now virtually.
Will.
Yeah.
Okay. Thank you. Thank
Thank
you.
you,
Thank you
madam.
so much for
Thank you
sparing
so
your
much
time.
and good day to you all.
Thanks, madam.
I'll go. Thanks.
Thank you.
Thank you.
Thank you.
Thank you so much.
Good
Good, madam.
Thank you.
Thank you.
Thank you.
Very much.
Thanks, you, sir.
Thank you, sir.
Thank you.
Thank you, sir. Thank you, sir.
Thank you, Ravita.
Thank you, sir.
So all the best to all of you.
Thank
We'll
you, sir.
continue this Leaders Speak series. We will try to bring the leaders from various industries, other banks also, so that you can interact with them and listen to them on various topics, their experiences, how do you work in the bank, face the difficulties, challenges, where the banks are going to lead the Indian economy. So all the best to all of you. Thank you. Thank you for joining.
Thank you.
Thank you, sir.
Thank you, Dr. Gupta ji.
Thank you,
Thank
sir.
you, sir. Thank you, sir.
Thank you, sir. Thank you. Thank you, sir.
So I'm ending the session now. The next session is batch 1, 2 o'clock. Actually, today was IBC session, but I cancelled it thinking it was a 3-hour session. so we'll not be able to cover in 1.5 hours. So it has been rescheduled. So you have a break now till 2 o'clock. We'll reassemble at 2 o'clock, batch 1.
Regarding batch 2, the session will start at 11:30. So batch 1 are requested to continue on a different link. Thank you, ma'am.
Okay, fine. Thank you. Thanks.
everyone.
Bye-bye.
Thank you.
Thank you, sir. Thank you, ma'am.
Thank you.
Thank you. Thanks. Bye-bye.